everyone. Thank you for joining us at SaaStock Remote in the New Markets, New Rules, Regulations, and Requirements session. I'm Joyce, the founder of Pegafund. We provide CFO services for high-growth European SaaS scale-ups. With me today is Marco, who leads international growth marketing for Google Cloud in Europe, and as well Stephen, who's the VP of Sales at Zoominfo. Over the next 25 minutes or so, we're going to cover a lot of content, which really focuses on the best tips and tricks around go-to-market. First, we're going to look at the global macro view of what's happened since the pandemic started a year ago. And then what we're going to do is zoom into some of the go-to-market nuggets with practical insights and tips and tricks around global expansion, as well as localization in Europe and the US. And then at the end, we'll save about 5 minutes or so for Q&A. So if you guys have any questions as we go, just feel free to write it in the chat and we'll pick it up at the end. So without further ado, I will introduce you to Marco and Stephen. Guys, do you want to provide a short introduction on yourself and your company, your role within the business as well?
Yeah. Hey, Joyce. Happy to be here.
Sure. Who goes first?
I'll jump in.
Why don't we go in alphabetical order, Marco?
All right.
Okay. Hi, everyone. My name is Marco Giorgini. I work at Google here, based in London. And I have 2 roles at Google. The first one is around international growth marketing. Basically, we try to help businesses, especially small and medium-sized, to grow internationally. The other role is a product role where I'm managing a team in charge of what we call vertical platforms, platforms such as Google Market Finder, Grow My Store, and Hotel Insights.
And I'm Stephen Bryerton. I'm the Vice President and Head of Sales here for Zoominfo. So Zoominfo is the leading go-to-market intelligence platform. We support at this point about 20,000 plus organizations and help power their new sales, marketing, go-to-market initiatives. And so that's it's given me a unique view into how people
Joyce,
are going to market and how they do it globally.
Okay, I can't, but that's good.
Okay, great. Thank you so much for that introduction. So I kind of want to zoom out a little bit and first look at the bird's eye view of like what's actually happened in the last year since the pandemic started. Can you guys just give us a little bit of context on like what's really happened in like your businesses and your industry? Maybe starting with Marco.
Yeah, sure. Well, Joyce, COVID was definitely a storm and also a bad one. And for Google, playing in many industries, from Google Cloud to Google Ads to B2C products such as Pixel or the Chromebooks. And it wasn't easy to adapt to this new world very fast. Now we saw significant changes in consumer behaviors and really like new habits and behavior are being formed as we speak. The macro trends that we noticed, obviously the growth of cloud services and Gartner forecasts an additional growth of 18% this year. The growth for online shopping, obviously teleconferencing, collaboration software, project management software, and home entertaining on the B2C side of things. And let's say on the negative spectrum, obviously the travel industry was hit very hard. And for us at Google, we are basically involved in all of these sectors. So in some cases, we had to reposition our role and from being a growth enabler to becoming just helpful and do something good for the society. Examples of things where I was particularly involved was where Hotel Insights, we launched Hotel Insights just because of COVID, trying to help hotels understand new demand trends for a particular destination. And on Grow My Store and Market Finder, we launched a few features to help online retailers understand new demand new demand fluctuations for particular products and help them capture this demand. So I'd say bottom line, COVID was obviously had a dramatic impact on the economy, on the society, but also it brought good opportunities, especially for first movers. And in regard to this, I think that entering new markets was, in some cases, a very important diversification opportunity when there were a few markets not doing very well. Obviously, expanding in new markets where the demand for your services was actually perhaps increasing was a good thing to do. But in other cases, it was just a recovery lever, and in some cases, just an anchor to survive.
Terrific.
Yeah, similar. I think Marco's point. At the very end there, the first mover piece. I mean, as the markets changed, we saw a big shift, not only just globally in different regions at different times, but also for different industries, different size companies. Things changed pretty rapidly, and so where the enterprise sort of stopped and halted in a lot of spaces because they had cash that they could sit on, in the SMB space, in our customer base in particularly, we saw a rapid movement to figure out, what are we going to do? We don't have the cash and the resources to sit back and wait. And so we need to go think about things differently, make decisions, be smarter, be more efficient, be more effective. And so the analogy we sort of, one of our RevOps leaders talked about was, if you think of a ship in the ocean, and enterprises are these really large barges and cruise ships, it takes them a long time to pivot and turn. And you've got all these SMB and mid-market that are, speedboats. They're able to zig and zag and change their processes to help overcome either the headwinds they're experiencing or accelerate into some of the tailwinds if they were, lucky enough to be in one of those industries. And so, yeah, we saw a lot of shifting. We saw a lot of companies think about their motions differently and try to rely on data more so than they ever were, and perhaps accelerate their digital transformation.
Super interesting. And Steven, if I recall, last year was also a very interesting year for your business because you guys actually went public on the NASDAQ, right? Right after the pandemic hit and the first wave. So what was that like going public in just very volatile markets?
Yeah, it was an odd, like a lot of people saw it as an odd time to go public. We were the first sort of major software company to go public since the pandemic struck. And I think for us, it was truly a testament to what Zoominfo offers to the market. There was no better time for us to go public when companies were looking long and hard about how do they generate revenue, how do they go to market more efficiently and effectively, how do they uncover their next best opportunity, how do they do all of those things, and ultimately that's what Zoominfo supports. And so going public for us was sort of just a reaffirmation of what we're able to solve for our customers. I mean, one customer jumps out in particular at the start of the pandemic. It's a company called Tentcraft, and they manufacture and then sell tents at like the VIP events. So, when Taylor Swift performs, at Wembley or wherever in the world, or there's a major golf tournament, they supply those VIP tents. And in the middle of March last year, their business evaporated entirely. Every event on the planet was canceled. And so they came to us and said, look, we're not just going to sit here and wither on the vine and hole up. We're going to figure out, where do we drive our next win from? And so they made a pivot to healthcare, and we were able to supply the data intelligence to do that, so they could offer tents for rapid testing for basically field hospitals. And by doing so and looking at sort of their now new addressable market differently, those next 2 months for them were the largest revenue months they've ever had as a business. So just sort of an example of thinking and using data to sort of inform the position and then rapidly iterate.
Yeah, it's certainly for like the startups and the scale-ups in the early stage ecosystem in Europe and arguably in the US as well. The ones that were very agile and responsive to the pandemic actually grew much faster last year than ever before. So I think it's good testament to that as well, on your particular point. So I guess I wanted to hear a little bit more about, now that we're a year later into the pandemic, what does this mean in terms of like potentially shifts in focus for you on an individual level for this year and next year?
Yeah, I'll go. I think for an individual level, it's if it's looking at, and I think this hopefully aligns for a lot of businesses. Pre-pandemic, you were used to going to market in a certain way. You sold a certain way, you sold a certain type of companies, you marketed the way your messaging, and then middle of the pandemic, a lot of those things changed. There were secular tailwinds or headwinds that made you have to reevaluate what you were doing, and now sort of hopefully post-pandemic, eventually we'll get to that stage, your market will continue to evolve. And so I think the learning for us and for some of our customers is that going to market effectively is a constant process. It's never good enough to say, well, this is our target market and this is why and this is what we're going to go at. It's constantly looking at where are we doing well, where are there other opportunities, where are we struggling, and how do we pivot more effectively to capitalize on those potential gains or minimize on some of those losses, and where different regions for you might be more fruitful than others in a given time.
Yeah, that makes a lot of sense, because I mean, I guess previously we had physical borders, if you will. In today's world, it's all digital. So it's, there's very limited or a lot less barriers to entry also, and defensibility around that. Maybe to touch upon that point a little bit more, Marco, would be curious to hear from your perspective. Google's a huge company, very global in nature. What are some of the best practices, but also like common pitfalls that you've seen with some of the customers you work with when they're trying to either expand from Europe globally or vice versa, US coming to Europe?
Yeah, sure. By the way, I can't hear Steven. So if there are any questions from Steven to me, you have to mediate, Joyce, because for some reasons I can't hear Steven.
Will do.
So on your question, we ran a study every year at Google to try to understand what the challenges are for businesses to expand internationally. And I was very curious to see the results of last year in 2020 when we ran the study during the pandemic, and compare the results with the year before. And surprisingly, the results were not very, very different, actually. They were pretty similar. The macro challenge that we see is to create the infrastructure to operate internationally. And that means a few things. The first thing is to being able to understand what are the markets with the highest potential for your business, for your products and your services. And after that, being able to adapt your operations. And for example, payments, there are more than 100 methods of payments worldwide. So you got to have the right method of payments, because customers won't be willing to pay something without their method of payments. And perhaps some of them will, but some of them won't. And you're probably going to lose even just a 5% or 10% of sales. Do you really want to lose 10% of sales because of a method of payment? Probably not. And same with customer care operations. No, some people prefer to just talk to via a chat, and others prefer to send you an email, or in the UK they prefer to call. You need to have the right ones, the right channels in place, and obviously marketing as well. It's difficult to have to adapt into a new culture, to understand the cultural nuances, and create awareness for your brand in a new market that you don't know. So I would say that best practices would be probably many depending on the topic, but I think the common one that I see to be very important is technology. I don't want to be, the Google supporter here, but really technology plays a very important role along the entire journey. So I think it's important that you, this audience, thinks about to adapt the infrastructure and make sure that the new tech infrastructure is suitable for the new business model. And so I suggest you to integrate the right tech partners into your expansion plan and review your infrastructure before expanding, and ensure you have the right agility and scalability to offer a great customer experience across markets. Then you asked me about expanding into the US, right, Joyce?
Yes.
So I'll take that question from the opposite angle. When US businesses, and here I want Stephen to confirm that, when US businesses expand overseas, usually they don't care much about localization, at least at the beginning of the process. No, and honestly, the rest of the world has adapted to that. Now, if I think about Shopify, a Canadian businesses, they charge in dollars in every market. They don't have a multi-currency approach. It's dollars and that's it. eToro in Israel is the same. So we adapted to that. But when a business from Europe wants to sell something to a US buyer, you absolutely need to localize all the aspect of the customer journey, because a US buyer will never be willing to pay in euro, right? Other things that US B2B or B2C clients care about that we noticed, for example, they like videos a lot. They like live demo. If you're in the software business, you have to show a live demo. They like testimonials quite a lot. And in general, they care about value. They care about features. They care about price. And they use the internet a lot to start their purchasing journey. No, they're very independent people. They want to search things themselves, and they appreciate a sales interaction at the end of the journey, but not in the early stage. Stephen, I'm sorry, I can't hear your feedback here, but did I get it right? And
yeah, it's okay. I've switched the microphones just for you, Marco. I'm trying everything I can here to make sure you hear me.
Thank you.
So yeah, no, I do think you touched on a lot of interesting points. I mean, so much of, and Joyce talked about it earlier, everything is digital now. So a lot of ways the world got a whole lot smaller. Not just to our own homes and living rooms that we can never leave, but the buyers are out there in doing a majority of the research. There's a few different statistics out there that they get 57% or 67% of the way through their journey. They don't want to engage with a seller before that. But from the marketing perspective, then that means that you have to sort of build your brand and your story and put it in a place and have that sort of third party and social proof that they're going to go out and find, because they're going to frame a lot of their opinions before someone like me ever gets a chance to speak to the prospect. And that as sellers and marketers, that can be very scary. Number one, you can be missing out on potentially 2/3 of the opportunities you just didn't know you could be involved in. And then number two, if you don't sort of necessarily speak to the heart of the challenges that you can solve, if you don't sort of highlight why you should be looked at as the minimally viable alternative and the only one that can solve these challenges, then you're opening yourselves up for perhaps a lot of competition that maybe didn't necessarily need to be there, because messaging, marketing, and then by the time sales gets there, it might be a little bit too late.
Yeah, that makes a lot of sense. I wanted to touch upon one point that Marco had made earlier, which is just this shift in technology and also as a byproduct of that product. So Stephen, I'm curious to understand, like, having been there from the fairly early days, how did your product evolve over time? And how did that actually impact your go-to-market motion in the different markets that you guys operate in?
Yeah, it's evolved a ton, and even in the last 24 months and 2 years since we Discover. I come from the Discover org side, acquired Zoominfo and rebranded as Zoominfo. It really is, as the product evolves, there is a big component of storytelling. We were in our early days a data provider. That was at the heart of what we do: high quality, accurate intelligence. And that hasn't gone away. We've folded in a lot more pieces there. But as we've made other acquisitions, as we've built other products, and Google sort of is where you strive to get to, right? Where you have all of these different lines, maybe in different areas that you can support. For us, it's been building a cohesive vision and building a sort of singular go-to-market operating system. And so that takes education from the marketing team to align our messaging. It takes education for the sellers in the different regions to be able to speak to different personas, how that affects different areas in culture. Marco talked a lot about the sort of phrases that you use and the words that are in your lexicon and how those are gonna vary globally. It's something that we've had to think a lot more about, presenting pricing in euros and pounds and in different regions. It's just sort of an early step. But yeah, it's been a significant journey. It's one we're still on and figuring out as we open up offices in different parts of the world. We will continue to test on and take learnings from frankly this.
Sorry, Joyce. I'm glad that I can hear Steven, so I can actively to this.
All here to the digital world.
Now you touched on something that I particularly care about, localization, and I think it was part of your question, Joyce, before that. I think I partially answered. I think sometimes localization is wrongly perceived to be just translating stuff, but there is so much more than that. Even the tone of voice you use, the date formatting, where to place the currency symbol, colors to avoid, cultural things to be aware of. There is really a lot, and I always think about the Japanese audience to be very meaningful as an example, because Japanese clients, they are treated always with a lot of respect and formality, and if you want to talk to a Japanese audience, you have to adapt that tone of voice, and make it formal. Also, the red as a color is perceived very very bad. So I mean, if your brand has a red in the color palette, that's fine. But if you can avoid to make a name of a Japanese person in red, I think it's better that you do that. And also there is some superstition there. Number 4 sounds like the word for death. I think it's she or something. So if you want to avoid any loss of sales because of superstition, probably you better go away from the number 4 in your pricing.
Yeah, it makes a lot of sense. Okay, so it seems like storytelling is important not only for customers and go-to-market motion, and as well as for a lot of startups fundraising, candidly, to get the right capital from the right investors at the right time. But what about like hiring talent? Early days, how do you compete with a Google who just has their pockets in so many different places and a very strong balance sheet as well? Steven, how did you guys attract talent when you're only 20 people?
Yeah, I mean, I think we relied a lot on our culture and the mission and what we were out to solve. I mean, Google at one point was just like every other early stage company, right? They had a vision that they were going to change the world, and that they believed something. And so it's finding those sort of like-minded people, hardworking. But yeah, early stages, the talent you bring on is more important. As a large organization, a mishire doesn't necessarily impact the organization on as large of a scale as it will as an early stage. So there are going to be characteristic traits. We use an assessment internally that is not just sort of a traits based, but there's also an intelligent quotient, and we have it looks at different areas of the business, and we sort of benchmark employees, and so that gets us on everybody on the same sort of base level. But then it's about finding those unique talents that you need and want to drive in certain areas.
You mentioned benchmarking, so I think there's probably time for one more question, and then we'll go to the audience in terms of the questions that they may have. But I was curious, as a CFO, always great to spend a lot of money in sales and marketing, but how do you get measured? Like, what are the KPIs and core metrics that you track within your team? And then how do you communicate that to the rest of the business and align that with company KPIs?
Yeah, I mean, our finance team looks at it as an efficiency rating. So, on new sales, I need to make sure we stay at least, at a 2x is sort of the ideal efficiency rating. So for every $1 we spend, I need to bring $2 back. We look at it differently on the renewal and growth and account management side. It's a much larger efficiency. It should be 7x plus. So that's how finance looks at us. I look at my team as a scorecard where there's sort of 4 main metrics. It's win rate, it's the ACV over the trailing 3 months, but it's also a component of the volume of demos that we give them. So their ACV over a completed good fit. So, if Joyce and Marco are both selling 100,000 a month, but I give Joyce 2 times more demos, then Marco is the more valuable rep and the one I should be getting more. So we sort of take those things, aggregate them into a scorecard every single month, and then the reps know exactly where they stand, where they're being measured, and then it's on me and our CRO to look at sort of the larger overall efficiency and where we're going to make investments to take back to the CFO.
Okay, very interesting. Let me check if there is any questions from the audience. Okay, there's some questions in here. Maybe I'll just ask the broader question, which is a question from Adrian that says maybe a US buyer buying euro only if they really want that product. So I guess my question is more around for I think who are mostly startups and scale-ups in the audience as well as investors. What would you say is what is your internal process around looking at either products or features or teams from an opportunistic point of view, either through partnerships or potentially acquiring those businesses? What's your process internally of building a case around that?
You want to take this, Steven? I think it's more for you than for Google because it will be a bit complex to answer.
The process of looking for partners as we grow the business, I think it's evolved quite a bit. We relied heavily on our internal individuals, and then as we grew, then we got it's still a moving target for us, and having a channel sales model or having a partner model. We've very much been in a direct fashion. I think our product lends itself to that, but there will be different organizations that early on partnerships will matter far more than it did for us. But now we're at a point where it's another channel for us to explore.
Okay, that makes sense. I think there's one question from Amir in the audience that says, "Can you give me an example where there was a disagreement on the efficiency rating made by finance and why?" It's quite a punchy one.
Well, I think a lot of times finance and business leaders will disagree on where to spend. I think it all comes down to having in any of these disagreements, each side will have their viewpoint as long as it's backed up by sort of data and a track record, right? The worst thing we can do is say, hey, we're going to go spend here. And it's going to change our efficiency rating from 2 to 1.5 or whatever it might be. That might be okay if we have a very solid reasoning to say, look, it's going to be a short-term change in the efficiency rating because we're going to have to make this upfront investment that then downstream is going to start to really pay itself off. So I'm not going to get into specific examples, but a lot of times it's around headcount, right? Should we go hire more sellers. And that can be tricky. We look at it as a capacity issue. So, as you layer in more sales reps, the volume of leads and demos that you're driving, how many demos or opportunities or whatever you're measuring per day or week or month are your reps getting? And is there a point where you start to see diminishing returns, right? It's not always solved by heads. It might be solved by turning off a source of leads that are low performing and regions that maybe we nurture more instead of sending them right to the sales reps. Maybe in some other areas of the world, you need to have a little bit more of a process before you start to engage with them. And that could lower your demos per day or opportunities per day and make you more efficient. So it's looking at sort of those different dials that you can tweak. And then having, a sort of data-backed point of view as you present your case in the financial court.
Yeah, I think it's natural that there's always a bit of tension, if you will, or accountability rather, between sales and finance in particular, and also product and marketing. So you need to have those like push and pull levers inside a business to really move it forward in the right way, in the most efficient way possible. All right, I think we're out of time, unfortunately. I have a lot more questions that I want to ask you guys, but unfortunately, we're just going to have to end here. Thank you so much for everyone who's in the audience who joined us this afternoon or morning your time. And thank you so much for Marco and Stephen for also joining us as well as part of this panel.
Thank you for guiding us, Joyce.
Thank you for inviting me. Thanks, Joyce. Bye, Stephen. Bye, everyone.
Cheers, everyone.